Welcome everyone. Just going to bring everything up here. Training. Sometimes amazes me how quickly these weeks go by. Next thing you know, another Tuesday is here, another topic, an interesting topic we're going to talk about tonight. So I'm just bringing it up on my computer here and making sure that I can see all of your comments as they come in. So there we go. So welcome everybody to Tuesday training. Say hi as you come on. I see a few of you are on already, and I'm sure more of you will pop on as we go along. So welcome. Private lending. It's just me today, by the way, guys. Tiffany is not going to be here, so you're stuck with just me. But hopefully we're going to talk about a topic that we're going to try to simplify. We're going to try to make it super, super simple. So yeah, now I can see I'm really fuzzy at saying so. That might be my internet connection, and I'm hoping that that clears up a little bit. Let me know if that clears up or not, because it looks a little fuzzy on my screen here too. So hopefully the internet connection gets a little better here. Corey, won any arguments lately with Tiffany? No, Greg. I do not win arguments when it comes to arguing with Tiffany. So good question. No, I haven't won any arguments lately. None that I can think of anyways. But thanks guys for coming on. Say hi. Let us know where you're from. We love to see the interaction. We love to see people, fearless members from all across the country joining us for our Tuesday training. That certainly helps. And if you have questions, as we go through this training today, then by all means put them in the chat. I'll try to get to as many of the questions as I can. I'm kind of on my own here today, so I'm hoping that I'll catch them as they go by. So just, if I miss it, ask it a second time. Yes, and I'm kind of fuzzy, but I think that's just my internet connection. Hopefully that clears up a little bit. Okay, so private lending. What do you think it is, guys? Put it in the comments. Let me know what when you think of the term private lending, or somebody in real estate investment uses that term with you, what comes to mind? What do you think it is? Can you describe it for me? How would you define private lending? I'd be curious to hear what your thoughts are on that. So just put it in the comments, guys. I'm going to wait just a couple of minutes. I'm curious to think, when you hear of private lending when it comes to real estate investment, what comes to your mind? Yes, and Tiffany is obviously paying attention to the comments. I never win arguments. You're right, I don't. Even though I should, I think. But anyway, that's a topic for another day. No more fuzz, Nin says, so that's good. It's starting to clear up a little bit better. Okay, so Sean is a mortgage broker. Sean here says non-traditional bank lender. That is a very good description of what private lending is. Any other guesses out there, guys? Is how would you define that term when you hear it, or when you're talking about it or describing it to somebody? And here's the thing. Higher interest rates, okay, Sarah. You know what? That's in a lot of cases, that's true, definitely, when it comes to private lending. Let us know what you're thinking, because I'm waiting for these comments, guys. I'm waiting for them to come through. I want to know what you guys are thinking when you hear that term. Other people's money, they are the bank. Very good. Another really good answer there, Randy. And that's really what it is. So here's what Google says, okay? So I looked this up because I thought, you know what? What is it actually defined as? So Google says private lending, and it's a really good answer. So try to remember this. Private lending is commonly referred to as the oldest form of mortgage lending, okay? Traditionally, private lending has operated in a non-bank environment. So it's where lending occurs and there isn't a bank involved, okay? So that's kind of the simple answer to what private lending is. So it goes on, it says where individual investors provide the capital required for specific loans. And in its simplest form, there may be one investor providing the capital for one borrower. Okay? So an investor providing the capital for the borrower. The investor is gaining interest, they're investing. The borrower is paying the interest, they're the one that is taking advantage of the lending. They're the ones that the money is being lent to. Okay, so that's in its shortest, simplest form what we're talking about when we say private lending. It's non-bank and it's individuals or sometimes corporations that are lending money to another individual or another corporation or somebody who wants to be a working partner, let's say, or somebody who wants to be an investor and do the work. So they're the ones that are receiving those funds from a source that is not the bank. Okay, so hopefully that makes sense. All right. So you notice behind me we have the board, and we are going to use that today, and we're going to go through some of this and hopefully simplify it a little bit more. Yeah, I got that. We're good. All right. Not so live, more like frozen. Hopefully it's not frozen for everyone. Greg, I think we're still rolling on my end, so hopefully everything's okay.
Mine's good.
All right, Denise, a great way to finance your deal without involving the bank. Exactly. So I think you guys are kind of getting the point as to what it is. It's alternative lending using an individual as a bank, lenders who have different criteria for qualifying borrowers than traditional institutions. Very good, Marianne. A great way to finance your deal without involving the bank. So I think you guys get the point of what private lending is, okay? So we're going to just draw it out on the board here. Hopefully this helps to simplify it just a little bit as well, okay? So now, we hear a lot of different terms out there in the real estate investment community. So number one, we have banks, okay? So that's, if we have private lending, we're going to talk about private over here. Then what we'll do for now is we'll call this public lending, okay? So more in the term that the public knows about this side, but really it's just real estate investors in a lot of cases that are familiar with the private side, okay? So banks. Now there's a couple of different ways that banks and different types of banks that are out there, and all of you know about this. You have your A lenders, you have your B lenders, and those are terms that are commonly referred to. And so sometimes people think, well, a B lender, that must mean that's private lending. But not necessarily. So let's just talk about this for a second. So A lenders. When you hear the term A lenders, what do you think of? Now, what would be an A lender in your mind? Okay, well, here's what it is. That in Canada is going to be your RBC, your TD, your Scotia, your CIBC, and what am I missing? Your Bank of Montreal. Okay, so those are what we call the top 5 banks. Those would be your A lenders. There's a few others that would also fit in the A lending bracket, we could say. And then we have our B lenders. Okay, so our B lenders typically have different criteria than the A lenders. They might, in some cases, allow mortgages to go through that maybe the A lenders currently aren't agreeing with or funding. They might be slightly higher interest rate, although a lot of B lenders are also just your regular interest rate, same as the A lenders. Okay, it's just different options. So, back in the day when we were doing it, we had Maple Trust, we had oh my goodness, I'm losing it now, but we have a lot of different names of banks. What are some other ones like National Bank? We have a lot of other MCAP. MCAP was another one that we actually took advantage of. So those are not your traditional banks where you go in and you do your banking, your A lender type thing. Okay, so that's considered a B lender. They're more maybe online or they're the ones that have a little bit different criteria than your A lenders. They might charge a slightly higher interest rate, but that's not necessarily always true. Equitable, Joanne, that's a good one too. Yep. We've had mortgages with Equitable in the past. Okay, so good. So those are some of the differences, okay, but remember, this is all still on the public side. This is all still having to do with banks, okay? And thanks, guys, for continuing to comment. Thanks for continuing to say hi and let us know where you're from. So that's awesome. Now, let's switch over to the private side. Where do we get this private lending? Who is funding this? Well, this could just simply be an individual, okay? Individual. It can be a family member that lends money to somebody else. It can be your neighbor. It can be your coworker. It can be anybody that you market yourself to as an investor. Now, that you can access their funds, they can join you in a joint venture, or they could join you by just lending you the money and being a private lender. So giving you money, and then that's registered on title as a mortgage. So it's the same thing, except you're getting it from somebody that's private. Okay, so it could be an individual. It could simply just be somebody that uses their corporation. Okay, so there's corporations that will lend money as well, do private lending. This could be somebody's RRSPs, okay, or other registered products that are registered within the government of Canada. So those could also be considered private lending. So those are the areas. It could be simply somebody's cash they have, okay, somebody who has of credit. Maybe they have a lot of equity in their home. And this is a big one, guys, because there's a lot of houses, there's a lot of properties across Canada right now that have a lot of equity built in. With the prices that have gone up in particular, I'm thinking of Vancouver, I'm thinking of Toronto. Those are areas in our country where prices went up significantly. And if somebody 5 years ago had a $300,000 mortgage and their house has now jumped from $600,000 to $1.6 million because the prices went nuts in those two cities, now they're sitting on a lot of equity in that property. So this is where we can now speak to those people and have them bring the equity out of their property, and they can either become a joint venture partner for us or they can become a private lender. Okay? So when we talk private lending, this is what we're talking about. Now, I just want to clarify. We have two different bubbles here, okay? We have our regular banks and we have private lending, okay? So I hope that you're understanding the difference between the two. And remember our definition? Remember our definition was very simply, it's one investor providing capital for one borrower. It can be many investors providing capital for many borrowers, but that's really what it is. It's somebody that's providing the capital that is not a bank. Okay? So hopefully that clarifies what the difference is between where we normally go to get mortgages and some of the other options that we have to go and access money for us as real estate investors. Okay? So let me know if this makes sense, guys, because we're going to move on to the next point. And the next point is, how do we access these funds, okay? And that's an important one, all right? So just let me know. I'm going to wait for just a minute. I'm watching the comments. I know there's about a 20-second delay, so I'm just going to wait here for a couple of, about 30 seconds or so. And just to clarify, does this make sense? Is there something that I'm confusing? Something that doesn't make sense? Let me know in the comments, okay, guys? I'm just going to wait just a minute here. Okay, and everyone's still saying hi. I'm seeing those come through, so that's awesome. And some connections are being made here within our group, so that's really good too. So awesome, guys. Okay, let me know if this is making sense. I'm just still sitting here waiting. All right. Okay, I'm going to wait for a comment. Here we go. I want to make sure that the two differences that you have no questions before we move forward, because now we're going to talk about how we access these funds. How do we find this money? Because you know what, it's all good and fine and dandy to know that this exists, but if we don't know how to access it or where to get it from, then what good does it, right? Okay. So makes sense. It makes sense. I'm starting to see that coming through. That's awesome. Trevor, private lending through TFSA and letting interest earnings roll over is the way to go whenever possible. Absolutely. Using TFSAs is a fantastic way of letting that interest just grow, grow, grow. Okay, so everyone's saying it's making sense. But remember that institutions can be over here too, but just not our traditional banks are typically over here, okay? So there is the difference between the two. All right, awesome. Everybody's getting it. Good, we can move on. Now, how do we access this money? Here's a big one. Well, how do we access the regular bank money? Well, we go to the bank, okay? We can go to the bank, we can sit with a mortgage person at our branch that we live close to or something like that, and we can qualify for a mortgage. We can fill out an application for financing, and maybe we'll get using that route. Another option, and one that if you have not used before, I highly suggest using, is getting to know a good investment-focused mortgage broker, okay? So a mortgage broker, now what the difference is going to your banks, and this is maybe very simple for some of you, but maybe some of you haven't heard this before. The difference between the two, guys, is you go to a bank, you fill out an application, they pull your credit report, you go through that whole process, they will either say yes or no, okay? And then what happens if they say no? Well, now you got an application filled out at RBC. Well, now TD, and you go through the whole process again, and they pull another credit report. And do you get the point here? Do you get the point? Now you're going to end up getting lots of credit reports pulled. Your credit goes down because of that. Not a good scenario to go through. So that's why we suggest using a mortgage broker, because what happens here is that mortgage broker simply pulls your report once. Once that's pulled, now they do the shopping for these banks. They find the best product that fits you. So that's why going to a mortgage broker, and you don't pay anything for it, okay? So the banks pay the mortgage brokers. So you don't pay anything for that mortgage broker. Now, I'm seeing some comments that the video froze. I hope that it didn't freeze for everybody. Let me know, guys, if the video is frozen. I'll just wait a second. I see some of the comments still coming through. Hopefully the video didn't freeze for everybody. Just refresh your page if it did. Hopefully that's going to be a little better. Okay, so it's working on my end, so I hope it's working on your end. Okay, so that's why we would suggest going to a mortgage broker. Now here's the benefit of using a mortgage broker, is that mortgage brokers in a lot of cases also can access private lending. Now think about this. If it's an investment-focused mortgage broker, they're dealing with investors that are needing mortgages, but they're also on the other side dealing with people that have money that they want to lend. A lot of investors also have money that they want to lend. And so there's investors out there accessing private funds for their use, and there's investors out there letting their funds be used, okay, in a private lending scenario. And so a good contact for those people, like if you're sitting there as somebody who, let's say you have $100,000 worth of cash sitting and you want to lend it out, now you can go out there and try to meet people or try to find somebody to lend it to, or you can go to a mortgage broker and they can set that up for you as well. So a lot of mortgage brokers can help facilitate private lending. Okay, so mortgage broker is one way that you can also access private lending in a lot of cases. But there's a lot of other ways, okay guys? There's a lot of other ways to access this. And we talk about this all the time, and really this is what our boot camp is designed towards, is how to find money, how to market yourself, how to get other investors in your network so that when you need something or if you have something to offer, that's what networking does. And so really that's what our boot camp is focused on. And I'm just going to make an aside right now, is our boot camp is 3 weeks from today. It starts 3 weeks from today, guys. The link will be put in the messages here in the chat, but we also have a post here in Fearless if you are interested in joining us for our boot camp, finding money so you real estate. That's what it's focused on. That money helps us to joint venture, but a lot of that money can lending as well. So we're going to be talking about that during our boot camp. So register if you haven't done that already. Okay. Where else can we access private money? We can advertise opportunity. Okay? If I have a really good opportunity, I have a really good project. Maybe I found a property that's under market value. I'm going to do a renovation on it. I'm going to up the value. I'm going to make some money by doing that. But, you know, going to the traditional banks, they don't like that short-term stuff quite as much. They like to be locked in for 5 years, 10 years and get their interest. So that's where private lending in a lot of cases can come in and really help in those cases. Okay. So, if I have a really good opportunity where I'm going to make some money, well, I can advertise that out And there might be some individuals out there with cash. There might be some individuals out there with RRSPs. There might be some individuals out there that have money sitting in their corporation that, hey, let's make some interest on it. There might be individuals or corporations out there with, like we said, cash. There might be people with equity in their house and they can pull out a line of credit and use that to lend. Think about it. If somebody's going to pull out their equity in their house and they can pull that out using one of these banks on a line of credit and pay right now 3, 4, 5% interest, and then lend that same money out and earn 6, 7, 8, 10% interest, why wouldn't they? The money's sitting there. They're going to access it from the bank, lend it out, and make 4, 5, 6% difference in between, okay? So this is the language that we need to start getting used to. This is the way of thinking that we need to start explaining to people, because there's a lot of people out there right now that have a lot of equity sitting in their house that they can pull that out. Okay, so I'm hoping that makes a little bit of sense. So if we have opportunities and we advertise that opportunities to our network, our group of friends on Facebook, we let people know what we're doing, and we talk about this all the time during our boot camp, and we're going to be focused on it like crazy this time, then absolutely that's a way that people will start asking you and say, hey, I have some money that I'd like to earn some interest on. This seems like a way safer product than me investing in stocks, and who knows what's going to happen. So you're somebody that I might know, or you're somebody that I trust. This is where we can start accessing some of this funds, by advertising the opportunity. Another thing that we're going to be talking about in our boot camp a lot is creating conversations. This is pretty simple, guys. This is networking. Okay, networking. We're creating conversations. We're getting it out there to others. This is what we're doing. We're getting it out there that these are the types of returns that we're seeing in some of our projects. Do you want to be a part of this? We're creating real estate conversations. We're changing some of the regular conversations that we're having with people anyways. Instead of, we're starting to turn them towards real estate instead of just using our talking about the weather. Instead of talking about sports, instead of talking about those sorts of things. And don't get me wrong, we still need to talk about those things, but we are creating new real estate conversations with people. That's another way where we can start to find private money. We can start accessing that money so that we can do some investing on our own, okay? Hopefully this is starting to make sense. I noticed, Trevor, you just put in the chat here that I just lost it, but it was that you had an opportunity of some sort. So stuff like that, just what Trevor's doing right now. I have a great opportunity, Trevor says. Trevor's one of our Ignited members. He is running across opportunities left, right, and center where he's from. He's a guy that, we've known for about a year. He's a guy that, this is the type of thing that, me as somebody who might want to lend money, I'm going to look at that and say, hey, that's the type of place that I would like to park my money. I'm going to get a good solid return with a solid guy. Hey, why not? Maybe I would look at something like that, right? So this is how creating conversation, just like what Trevor did. Now, I don't want everyone to throw on their opportunities on this chat. That's not what this is for. But that gives you an idea of exactly what we're talking about. We can start finding private money by creating those conversations. So hopefully that starts to make sense, guys. I noticed Nin put a link in our chat for the boot camp. If you have not registered yet, guys, we have an early bird. It's an early bird coupon discount code. It's only $38 or $37, something like that, to access our boot camp. And it's 5 days. We're going to be live. We're going to be live for 5 days, plus we'll have some extra bonus sessions in there as well. And we're going to be talking about accessing private money. Now, whether that's for joint ventures, whether that's for mortgages, whatever it is, whatever we decide to do with that money, it's about creating these opportunities. So if you're not registered yet for our boot camp, join us. It's going to be absolutely amazing. It's the best course you can take for $38. I guarantee it. And if it isn't, we'll refund your money. I promise you. Okay. All right. So hopefully everybody starts joining there. We got a whole ton of people in there already. Okay. So is this making sense, guys? How do we access private funds? We access it by advertising opportunity. We access it through our mortgage brokers. We can access it by networking, creating conversations. This is how we start to find private money. This is how we start to find people that will lend us money that then we can go out and do whatever we want with it in real estate investment. Okay? So this is really, really, really what we were trying to get across today, because there's so much confusion when, somebody says private lending, what does that mean? So it's different than the public lending, okay? It's a non-bank. The banks are over here. The A lenders and B lenders are over here. Private funds are over here, and we have different ways to access it. You notice with the banks, we either walk into the bank, we call the bank, or we deal with a mortgage broker. That's how we access that money. But there's a lot of different ways to start accessing private funds. Okay, and so I just want to throw this out there for some of you too, that if you are somebody that wants to lend money, then you do the same thing. You create conversations. You start advertising the fact that you have money you want to lend. And maybe you don't really need or want to be a part of an equity share in a property, but you don't mind making 8, 10, 12, 14% return on your money, and that's registered against a property. It's securely registered as a mortgage on a property. So if you have money you want to lend, then that's another opportunity, guys, where you can start making great returns here in real estate investment. Okay, so let me know if you have any questions. Anthony, I would like to know more on how to access private lenders in BC that I can use for my investment portfolio. So we just talked about that, Anthony. We can access it through these 3 ways, and there's more ways. There's a lot of more ways where we can start to access private money. But again, how many of you are connected with an investment-focused mortgage broker? Okay, there's a difference out there, and we talk about this when it comes to realtors. We talk about this when it comes to lawyers. We talk about this when it comes to mortgage brokers, that you want to deal with somebody that works with investors on a regular basis. In fact, if you can find a mortgage broker that solely works with investors, or a realtor that solely works with investors, or a lawyer that solely works with investors, how much more experience they're going to have in the investment world, how much more connections they're going to have within the investment world that will become connections for you to have. So just remember that you're so much better off, instead of using a friend or family member that happens to be a mortgage broker, you're so much better off being connected with an investment mortgage broker or an investment realtor than you are just using a friend, using a cousin, using somebody else's friend. Believe me when I say this, it's vital to your investing strategies. Okay? All right, good. Sure, Tiff just brought me some water, so I'm going to have some water. I'm talking too much. I'm not used to talking this much. Usually she does most of the talking, and here today I'm doing all the talking. So yes, I'm not used to it. Yes, Brenda, $38, that's it. That's all it takes to be a part of our boot camp. And here's the thing. We've done our boot camp 3 times, guys. And every single time, we've had many of you that have been there for all 3 of our boot camps. And every single time there's new gems that come out. Every single time, what it does is it just reinvigorates you. It's like we call it a boot camp for a reason. It's a kickstart. It's like, let's get going. There's work involved. That's what boot camps are. You got to do homework. We will get you to do homework. We're going to get you to step out of your comfort zone. And if that makes you shrivel when you hear those words, step out of your comfort zone, like it makes me, then the boot camp is absolutely for you. It will get you doing things that maybe you've never done before. And that's what propels us in the real estate game, is doing things we've never done before. Okay? All right, good. I see a lot of chatting on here, which is awesome. Do we have referrals for different types of mortgage brokers? Corey, you are one of our Ignited members. Absolutely, we can refer you to a couple of different options. And we definitely have some options for you. So we can arrange that. Okay, and Sean absolutely is somebody that's regularly been here within the Fearless Group and supporting you guys. So, I would say reach out to Sean as well. And Sean is a fantastic investor-focused mortgage broker. He understands the creative strategies that we all as investors like to use. So, there's a really good contact for you as well. Okay, but we'll put together some options, and Tiff put it in the chat there, and we will share that with you guys. Okay, so let me know if you have any questions about what we've talked about so far, okay? We're going to have a little bit shorter of a session today, but I want to know whether you have any questions about private lending, okay? Is this as clear can be? Is this as clear as mud? Let me know in the comments, okay, guys? All right, good. Now, what else do we want to talk about when it comes to private lending? Let me just pull up my notes here and make sure that I am covering everything that we were supposed to cover. I just want to make sure. Oh, you know what? One thing we're going to cover is this. We're going to erase this board. Okay. Hopefully you got that. All right. We're going to erase this. And we're going to focus a little bit more on private lending and some of those things we talked about inside that private lending bubble. Okay, so here's our private lending bubble. And there's something that does confuse, oops, let me just bring this back. That does confuse some people, okay? So we have cash. We talked about that already. Maybe we have an LOC or someone's LOC, line of credit, okay? And we also have RRSPs. We have other registered funds. Okay, so now both of those are within that private lending bubble. But there's a difference between some of these, okay? So when it comes to cash, let's say I have $100,000 cash and Trevor finds me a great deal. I lend him that $100,000 cash. He pays me 10% interest. And over a year, I end up making $10,000. He pays me out. I get $110,000 cash back. Sometimes there's other fees that are involved in that when there's private lending being done. But for the most part, I invest $100,000, I get $110,000 back. Okay? Now, how is that different with an RRSP? Okay, I'll let you think about that for a second. Is it any different when it comes to money that is an RRSP? Okay, so there's one thing that we need to clarify when it comes to RRSPs, because if somebody has, let's say $100,000 RRSP, and it's sitting at a bank, and let's say it's at Bank of Montreal, just to pick a bank, and they have it invested in a few different funds at Bank of Montreal, because Bank of Montreal or any of the 5 banks, they say that you can self-direct it. So they've directed it towards a few different funds. Now, can you access that money? Okay, can you access that money from Bank of Montreal, and can they invest that money with you? The short answer to that is yes and no. Okay, so this is one thing that we just want to clarify, because sometimes there's confusion when it comes to RRSPs. Okay, they are different. The reason that they're different is they are registered with the government. They're a bit of a tax shelter, as you guys know. Okay, so when interest is gained in there, you don't have to pay taxes on it. You only pay taxes on that money when you withdraw it from your RRSP. But if, let's say, somebody has money sitting at Bank of Montreal, or one of the, we shouldn't pick on them, but we'll say at an A lender, okay, and it's an RRSP. What they need to do is they need to transfer that money, okay, to a trust company. Okay? They need to move it. Now, does that mean they're pulling their RRSPs out and paying tax on it? So they're pulling their $100,000 out. Let's say they pay $30,000 in taxes, and now they have $70,000 in the trust company that they can invest with? No, that's not what it means. When they leave it from it, bring it from an A lender to the trust company, that $100,000 goes from the A lender over to the trust company. There's no tax implication whatsoever, okay? They're just moving it from one institution to another. That is not considered a withdrawal, okay? So now they have $100,000 sitting within this trust company. And I'm sure some of you guys out there are more up to date when it comes to which trust companies can be used. I know Olympia Trust was the one that we used for most of ours when we did this. But they now have that $100,000 in that trust company. Now, what are their options? Well, the government allows you to invest in mortgages. Okay, so they can now lend that money out. If it's in a trust company versus one of the A lenders, they can now lend that money out to you. Now, here's the catch. They cannot own any part of that property. They cannot have an equity stake in that property. They can't use that money to joint venture with you and have an equity stake. But what they can do is they can lend it to you on the basis of a mortgage and get paid an interest rate. Okay, so just like the bank, let's say one of our A lenders, we got a bank at TD. The title is still in our name when we buy that house. But TD, even though they lent us the money to buy the house, they're registered on title as a mortgage. Okay, the same thing would happen here. This person's RRSP is the person who owns that. Let's say his name is John. John would be on title as a mortgage lender. Okay, just the same as one of the banks. All right, so they cannot own. John cannot own an equity stake. He cannot take part necessarily in the cash flow or the equity or the mortgage pay down or any of that sort of stuff that real estate gives you as an investor. But what he does get is a guaranteed interest rate that is registered on title as a mortgage. Okay, so I hope that makes a little bit of sense for you. And this is still under the private lending bubble. And we talked about that earlier. There's a lot of people with RRSP money out there that their RRSPs are not doing good in the traditional sense, in what they haven't invested in the different funds that are out there, the different market funds or whatever they have their money at the big five banks invested in. And so what we can now do is give them an opportunity to register their money as a mortgage on property and make a guaranteed interest rate. They can get a 4%, 5%, 10, 15%, depending on the situation. Okay, so what makes the difference between somebody lending their $100,000 out and getting 4% and somebody lending out their $100,000 and getting 10 or 12%? Okay, that's what we're going to talk about next. So hopefully that just clarified one thing about how the RRSPs work. Okay, the one thing I wanted to clarify there was that somebody who invests their RRSPs, it can be done as a mortgage on a property. It cannot be done as an equity stake in a property. Okay, so I just wanted to make sure that that was clear. Now, what's the difference? Okay, so let's go here. Let's get rid of that. What's the difference? Now, let's say it can be cash. I just erased it, but cash, LOC, RSP, doesn't matter, any of those forms that we were talking about, and somebody getting 4% interest or somebody earning 12% interest, okay? What would the difference be? I'm going to give you a couple scenarios here, and hopefully this makes a little bit of sense, okay? So I'm just going to check the chat before we move into that. Can you JV with an equity stake from a TFSA? Harvest asked that question. I don't believe so, Harvest. I would say no is the answer to that. So if it's a registered product and you use those funds to now invest in real estate, I don't believe you can have an equity stake in that property. But again, check with your accountant, check with your mortgage brokers on this kind of stuff. I am not an accountant, okay? So I don't believe so, though. Yeah, Sean says that he uses Olympia, so that's great. Okay, so now what's the difference between 4 and 12? Why would somebody get 4% and why would somebody get 12%? And of course, there's a million, that can be anywhere in between there. Now, you picture yourself as a lender, okay? Now, most of us who are watching this, most of us who are going through this are picturing ourselves as the person who is trying to access the money, as somebody who needs the money to invest in real estate or to buy a piece of property. But now I want you to turn around in your mind, and I want you to think of yourself as the bank, as the lender, as the person with the money, okay? So now I want you to think about yourself as having $100,000 in your pocket, okay? You have $100,000 and you have a couple of different options as to where to invest it. Okay, option A, let's look at the scenario. Let's say that it's a 400K. Let's say that there is no other mortgage, okay? It's owned free and clear. You would be going in a first mortgage position. Now, hopefully you know the difference between first mortgage and second mortgage. On a title, the first one that's registered, that is considered the first mortgage. That one has to be, in order for that property to be sold, that mortgage needs to be paid out, okay? It has first right of getting paid, okay? So it's the most secure. Now you think about it, if there was 10 mortgages on a title, how secure would the 10th guy be? Well, he would be the least secure out of all 10 of those mortgages. So first is most secure, second is second, third is third, and so on, okay? So no mortgage currently on this product. We'll go no mortgage. And you have your 100,000. So the loan to value in that case, when you put your $100,000 on, the loan to value in this case would only be down at 25%. You're really, really secure. That property, for you not to get paid out, that property would have to sell for less than $100,000 for you not to get your money back, which if it was appraised at 400,000 would be highly unlikely, okay? So it's very secure and a loan to value is very, very low, okay? So somebody in that particular instance might get a lower interest rate, let's say 4-5% on their money because it's so safe, okay? Now, why would somebody get 12, 14, 16, 18% on their money? Usually it's risk. Remember, you're thinking as a lender here. If your risk is higher, you're going to be charging more, okay? So maybe in this case, we got the same property, 400,000, 400K. It already has an 80% mortgage on it, so it already has a $320,000 mortgage on it, okay? But somebody now needs that 100K. So now it's going to bring it up to, with your 100K, it's going to bring it up to 420K. There's going to be 420,000 mortgaged on that property. Remember, it's only worth 400K. Now, this is just an example to show you the difference as to why somebody would get a higher interest rate, because their risk of losing that money is significantly higher, okay? This person here would get a lower interest rate in most cases because their risk is significantly lower. So it comes down to risk. Now, here's the catch. Let's say that you as a lender has lent to this guy 10 times over. You've lent to him, you've been paid back. You've lent, you've been paid back. You've lent, you've been paid back. Every single time the experience has been great. Now this guy, he's the same guy. He comes to you and saying, hey, listen, you know that I always pay you back. You know our track record is good. This is my scenario, and I'm going to buy this property because I'm going to do a renovation, and I need the 100K to do the renovation, and I need some extra money. So I'm going to do this, and at the end of this renovation, it's going to be worth 800K. And this is somebody that has a really good track record with you as a lender. Well, now this interest rate might go down. He might get this money for 8%, maybe 6%. Why? Because of his track record. Because of his track record. So there's a couple of things that have a lot to do with private lending, okay? Now, the banks also look at your track record, absolutely. But private lending can be even more looking. I don't know how to term it, but they're going to look even more at your track record in cases, okay? So a couple of things that will affect the interest rate that you pay for when it comes to private lending. Risk, the amount of risk that's there, and track record, your reputation. Those things are so important when it comes to getting access to those funds and what you're going to pay to access those funds. Does that make sense? Let me know what you guys are thinking. Now, I'm going to look at some of these because I see a lot of discussion here. Yes, so absolutely. Grant is making a comment about accessing private REITs. That's another private lending type of scenario. Yeah, for sure. Everybody has different fees. Each trust company has different private REITs accessible. So you can, a REIT is essentially a whole bunch of private lenders getting together and buying a property or buying a project. And a whole bunch of funds put together from different people to build something or to purchase something. That's why a up, okay? Good. So some good, first, second position, Colin, will affect interest rates. Absolutely. Good. So you guys are talking about some of your experiences with Olympia. Olympia is who we used for our mortgages, and they were RRSP mortgages. Yeah. Okay. Okay, good. So I don't see any questions. Now, if you guys have any questions about this is fairly basic stuff, or we're trying to keep it basic. And here's the reason why. The more we go over this, the more this sinks down in our mind, the more we deal with this kind of stuff. If we can make it simple, if we can make it easy to understand, if we can now explain it to this individual that has cash, or this individual that has an RRSP sitting at one of the big 5 banks, and we can say to them very simply that, hey, you know what, I have a really good project that we could use that money on, and we're paying 6, 8, 10, 4, whatever percent you might be paying on that project. It's going to make people think, but they're going to have questions. But we have to explain it in a simple manner, okay? Because what does a confused mind do? A confused mind says no. So we want to just be able to understand this and explain it in a simple manner. Yes, so Olympia, or Trevor makes the point, Olympia needs to be under 100% loan to value. Absolutely. The lower loan to value, the better. As borrowers, a lot of times we're trying to increase our leverage, and we talked about that last week, increasing our leverage. So we want to go as high as possible. Lenders want to go as low as possible on that loan to value, because then they're secure, they're far more secure with their money. Okay, good. So a lot of good information being shared in the comments. If you guys have any questions, let me know. If you have any questions, let me know. But one other thing I wanted to say, and I just want to reiterate this, I've mentioned it a couple times during this live, is to join us in our boot camp. We're going to be focusing a lot on how do we start these conversations? How do we talk to these people that have the cash? How do we talk to these people that have the RRSPs? How do we convince them to invest with us, either as joint venture partners or as lenders for us? How do we get those conversations going? How much information do we share? What do we not want to say? Those are the types of things that we're going to be discussing in our boot camp. It is literally the kickstart to your investing career, and I'm sure anybody who's been a part of our boot camp before would agree. And we're also going to give you an opportunity to join us in our Ignited program at the end of our boot camp. So that's going to be really exciting too. We're looking forward to a lot of you joining us as Ignited members at the end of our boot camp. So that's going to be super exciting as well. So guys, that is what we wanted to talk about today. That is private lending. That's private lending in hopefully as simple as possible way to understand the nuances of it, what the differences are between public and private, and hopefully that clarifies a few things in your mind. So Nin shared the link to the bootcamp. Again, here's the key, guys. If you're joining us in bootcamp, enter the discount code EARLYBIRD, okay? It can be caps, not caps, it doesn't matter. Just in the discount code section, the promo code section, type in EARLYBIRD and you will see the price automatically change. I think the regular price is $67 that we will be charging starting next week. But the early bird price is $37. So get in now at 37 bucks. You will get access. We will be doing our boot camp a little different this week, or this time. We're going to be doing it in a separate Facebook group just for the boot camp and just for our attendees. Okay, so in order to get access to the boot camp, click that link and you'll have access to that new Facebook group. Okay. All right, so there we go. I think that's all we wanted to share today, guys. We're so excited looking forward. Boot camp starts in 3 weeks. So absolutely join us. Thanks for joining us today for another Tuesday training, or a tactical Tuesday. I think that might be a name we might start using. I'm not sure. Nin's going to do a poll, but yeah, awesome. So great to see you all. And hopefully that cleared up a few things, and we will see you next week. We have an interviewee next week that we're excited to share with you, somebody who has really changed the landscape of investing, and it will be a super cool interview. So we're looking forward to that next week. And yeah, that's it. All right, guys, take care. We will see you next week.